Happy Friday, guys. My name is P, and welcome to another edition of Phipps Tips. In today's episode, we're going to take a look at the overall market. We're going to check out its top performers. We'll have a look at the biggest winners and the biggest losers of the day. We got a couple of news articles about regulation and where it fits into the crypto space and when we can expect it. Then we're going to wrap it all up with a little bit of technical analysis on Bitcoins, try to find out where that's going. All that and more coming up. Stay tuned. We are on coinmarketcap.com, guys. The market cap checking in at $334 billion with a 24-hour trading volume of $18.4 billion and Bitcoin dominance settling in at 38.2%. Of our top 5, we got a little bit of green going on this morning, guys. Who knows how that's going to end up for the rest of the day, but so far, so good. Bitcoin up just 1.15%. Ethereum up 5%. Ripple up 1.5%. Bitcoin Cash up nearly 5.5%. And EOS still chugging along up 11.64%. Movers and shakers versus Bitcoin today, we have MadeSafe Coin up nearly 24%, Mixin up 23.5%, MyBit token up 22.21%, Bitcoin Private up 18.43%, thank you John McAfee, and iExact RLC up 17.69%. Let's check out what we've got going on our gainers and losers this morning. Photon up 221.79%. LatiumX up 144.62%. Dignity up nearly 50%. Mark.space up 44.13%. And ShipChain up 40.24% on the day, guys. Our biggest losers so far, we have Bitsor down 41.06%, Nexty down 31.17%, Kazcoin down 29.85%, Ucash down 26.78%, and Aditus down 26.31% on the day. We're going to go ahead and move into these news articles. I'm kind of excited to be bringing you this morning, guys. Feels like good news to me, but you know, we'll see. Stay right there. Leading crypto show host on Fast Money talks Bitcoin, Bitcoin manipulation, and the U.S. crackdown. Rand Neuner, presenter, crypto trader, and founder of On-Chain Capital, appeared on CNBC's Fast Money today to discuss yesterday's Bloomberg article that claimed that the U.S. Department of Justice was launching a criminal probe into whether traders illegally manipulated the price of Bitcoin and other cryptocurrencies. Following a live cross to Seema Modi, CNBC Business News, who explained how yesterday's allegations were welcomed by many crypto enthusiasts, Neuner appeared on Fast Money to provide insight on crypto market manipulation and the current regulatory climate. The conversations on manipulation went as such, acknowledging how everybody thinks manipulation is going on. Whenever she's scrolling through Twitter, host Melissa Lee asked Neuner if he shared this same sentiment. The South African responded firstly by agreeing that in the past it was easier to manipulate Bitcoin and other cryptocurrencies. This, he justified, was due to there being far less on-ramps and off-ramps connected to the whole ecosystem. The examples given are crypto exchanges, trading platforms, brokerage services, yada yada yada, the list goes on, making for an illiquid crypto asset market. However, Neuner disagreed with Lee regarding the manipulability of crypto market we know today, because trading activity is orders of magnitudes higher than in years past. He concluded that today would be a lot harder to manipulate. And before we move on, guys, he couldn't be more further from the truth. There are groups, individuals who want or at least have an agenda for Bitcoin. There's no doubt about it. And they do manipulate the price. Where he's thinking just because we're at $330 billion market cap that makes the manipulation hard, he couldn't be any more wrong. While respecting his reasoning, Lee countered by referencing last decade's Libor scandal, which, despite being perhaps one of the deepest markets out there, was able to be manipulated by certain banks. And guys, so I looked into what the Libor scandal was, and what Libor is, it's an interest rate calculated through submissions of interest rates by major banks across the world. And supposedly it was manipulated by certain banks in the US and in the UK in, I believe, 2014. It's actually, you can read about it here on Wikipedia. That's where I learned about it. It's pretty interesting stuff, and it's also really the reason, in my opinion, why a lot of millennials, they have a deep-seated mistrust of the current financial system. And, you know, it's really hard to blame them for it, especially, you know, when things like this happen and only one person convicted in connection with it, and the 6 bankers in the UK were cleared. So, you know, it just seems to me that, well, as long as, you know, you've got money, you don't have to worry about, you know, being held responsible for anything that you do financially. Just kind of scary. So, we're going to see what this tweet was all about. CNBC's Fast Money tweeted, CNBC Africa crypto trader host Crypto Manaran says the DOG's crackdown on Bitcoin is actually a buying opportunity for Bitcoin. A crackdown on what exactly? Nooner admitting to being confused by the U.S. regulators would be clamping down on potential Bitcoin price manipulation, when the asset class still hasn't been defined by U.S. federal law, asking if it's, for an example, a potential market manipulation, illegal in terms of what act? We're not regulated as an equity. We're not regulated as a currency. We're not a commodity. We don't know what we are. That aside, Nooner encouraged any would-be U.S. regulatory crackdown, saying that we've got to weed out the bad actors. Should such parties continue to participate in the markets, the crypto trader host worries that it will create a lack of trust in this asset class, thus harming the chances that Bitcoin, Ethereum, and other major crypto assets have of someday achieving mass-scale adoption. And the regulatory hot potato. On categorizing virtual currencies and ICOs, Nooner stated that either unfortunately or fortunately, it seems that a lot of territories are waiting on the SEC to set legal precedent. He pointed to March's G20 meeting, along with commentary out of the European Parliament, as indicators that most developed countries are basically saying, we're not legislating this thing yet, we're still going to watch and see, which Nooner interprets as an unspoken agreement that they're fine with permitting the SEC to call the shots, so to speak. He highlights Japan and Singapore as harboring a very favorable regulatory climate for cryptocurrencies and ICOs. South Korea, too, should come out with positive regulation in June, Nooner added. And I find this kind of ironic that he says something like this, because Japan has lost its biggest crypto exchange with Binance moving to Malta. So how very favorable is that? Just, you know, something to keep in mind, guys. And we're going to end this bit of segment on a Rand Nooner tweet saying that I'm buying, expecting a major report at major support at $6,900 if it gets there. Market manipulation may have happened. If manipulators are taken to task, it brings us closer to institutional money inflows. Add that to infrastructure being built, at Coinbase launching institutional grade trading system, and we could likely see moonshots coming in the near future. Will that happen? We don't know. But what I do know, guys, is Bitcoin is being manipulated, and this guy is just trying to brush it aside as, it's nothing major, when in fact it is very, very major. Just something to keep in mind, guys. Drop me a comment down in the comment section. Let me know what you think about the market manipulation. Do you think it's, nothing to be too worried about, and that, people are making a big deal out of nothing? Or is it something that we should really be taking seriously and consider a threat to the market? I personally believe that it is a huge threat to this market, and if it's not taken very seriously, serious implications could happen. Just my opinion. We're going to move on. In our next news segment, more Americans will turn to crypto if the Fed relaxes post-2008 measures, analysts say. Most Americans may move away from traditional finance and into crypto when the U.S. Federal Reserve relaxes post-2008 financial regulations, according to a study published by Weiss Ratings May 22nd. The Fed is set to meet on May 30th to consider watering down the Volcker rule in what would be a major deregulatory move. The relaxing of the Volcker rule would allow thousands of banks to make high-risk profit-seeking trades with less governmental oversight. If the Fed's plans go ahead, increased systemic financial risk could well push citizens to conclude that cryptocurrencies do a fundamentally better job as a safe depository, Weiss analysts argue. According to Weiss, banks are lobbying for more freedom to trade speculative assets such as derivatives, whose ownership is extremely centralized. These potentially toxic assets, such as derivatives, are not simply investments and speculation banks make with their own capital, but pose risks to clients' own deposits in the event of other major system crises, Weiss claims. Weiss argues that while the public on average assumes that banks will provide them with simple, safe, and unencumbered storage for their savings, the reality is that traditional monetary system, especially if deregulatory momentum sets in, continues to offer banks rich rewards for excessive risk-taking. As Cointelegraph reported last year, scandals and failures have turned public sentiment against the traditional banking system in the past, with one report finding that many as 92% of millennials firmly express their distrust of banks. Geopolitical turbulence is another threat factor, as most recently shown by the dramatic collapse of the Iranian rial in response to the U.S. withdrawal from the nuclear deal. Anticipating renewed U.S. sanctions, Iranian citizens preemptively withdrew $2.5 billion in crypto out of the country. So what does this tell you, guys? This tells me that the Fed is definitely taking a serious eye on cryptocurrency, especially if they start deregulating things that are put into place to keep, us safe with our banking situation. And, banks currently, guys, they are like the gatekeeper. They hold our money. They tell us what we can and can't spend our money on just because they hold it in their building or in their account. And, I find it extremely frustrating that, banks, they feel like they have this power over us. And, I'm not a millennial myself. I'm a Gen Xer. But I do understand, where these people are coming from. I don't know how many times, they claim that this is a security feature and a safety feature, but I don't know how many times I've pulled out my ATM card to go to use it, and I feel like a fool because, my transaction is being declined over and over and over, and I don't know why. Only to come to find out that, the bank sees that I've made some transaction that I normally don't make and instantly put a stop on my card until I call them to have it lifted. That is infuriating to have that happen. And then they call that a safety feature, guys. They say that, I pay money for that service. That is not a service I want on my card. That is not. I keep an eye on my bank account, as I believe everybody should. And if I see a transaction that I know I didn't make, I call my bank. I don't need my bank taking steps for me. That is not why I have them. I have them to store my money, to give me a little bit of interest on the little bit of money that I have in there, and to make sure it's safe when I make purchases that I choose to make. Not, oh, well, this guy, he's making a purchase that we don't follow, so stop on the account. No, that is not acceptable. So let me know what you think, guys. Do you think that banks have gone too far, and it's time for a little bit of change? I believe so, personally. I think that the centralized banking, it's had its day in the sun, and it's getting a little long in the tooth, and it's time to pass the torch, so to speak, to assets and currencies that are deregulated, that don't need to have this type of governmental oversight, that can just do what it does on its own because of the blockchain, and because it's transparent, and because people can see exactly what's going on. That's just my opinion. Drop me a comment down in the comment section, guys. Let me know what you think. Would you turn to crypto if the Fed relaxes its 2008 measures? I mean, I would. I absolutely would. And it's not just because, I'm invested in it. I think that, excuse me. I think that it's the smart decision, and that we're going that direction, guys. May not be today, may not be tomorrow, may not be next week or next year, but eventually fiat money will become a thing of the past, like the $2 bill or the 50-cent piece. It'll become a novelty, and it'll be something cool to have, but its practicality it's out the window. Just something to think about, guys. We're going to move on to our technical analysis here. Stay tuned. And here we are, guys, on the Bitcoin versus US dollar day scale, using the Bitfinex exchange information. And guys, I've taken the liberty last night of drawing out a few ideas that I think that Bitcoin could possibly take. Now, I'll explain each of these to you guys as we come to them. The first that I would like to show you is this giant descending triangle that we have here, guys. I've got it mapped out in blue, starting here down to this point, and then the bottom trend line here. And as we can see, Bitcoin has fallen into this and is having trouble breaking the top trend to actually get out of this. So what we can see, and I'm going to zoom in here, I want to turn off auto, zoom in, click it back on so we get a tighter picture. There we go. And as you can see from yesterday, we had that green doji, which I said would signify a reversal. And while it's still early in the day today, it's currently 8:15 in the morning Eastern Standard Time, so we've still got about 12 hours of trading left to go on this current candle. We are forming a red candle doji, which, as I said yesterday, on the green candle would indicate a reversal. Now, as I also stated, this is just a technical indicator, guys, which means that left to do its own thing, the technical response would have been for Bitcoin to rebound today and head up. But technicals aside, you know, Bitcoin is manipulated. And, you know, I'm just going to leave it at that. And we're going to keep going into the technical analysis here. So what I have charted out here, guys, is if Bitcoin continues with the green doji like I suggested yesterday, we can see a bounce off of this trend line here. This one that we've gotten support from many times back here in 2017, in September of 2017. We've had it help in April, and now here currently in May we've had a touch. So, but we are currently seeing Bitcoin bounce off of this, so that is still a good sign. But what we can see here is that I have put Bitcoin into kind of like a downward channel. We're having trouble breaking out of this top channel here that I have in green. Now, what we will need to do, guys, geez, is if we want to see an actual rally, we'll need to see Bitcoin break through this top bit of the channel and then break again through the top of the descending triangle. And that would put us into like, around the 9,300 range, this bit of support here. But we do have, you know, a bit of resistance to punch through. Now, that is my bullish sentiment on how it could happen. Now, the bearish sentiment, that's a little bit worse, guys. As we can see, I've got it drawn to where we break past this trend line. In fact, I'm going to go ahead and remove it just to make things a little more clear for us. There we go. And as we can see, I've got it so we trend down, we bounce off this bottom bit of support that we've had as support many times before. We bounce up again off the descending wedge, or the descending triangle, I'm sorry, and then we just continue to bounce until, you know, we've tested it so many times. I'm going to grab my drawing tool. We tested here with a break. We tested here and it rebounded. We tested here and it rebounded. So what we can see, guys, is if it tests here and rebounds, it could bounce here, come back down and test again. And what we know, guys, from traditional market sense is if Bitcoin keeps testing and pounding this bit of a line, eventually it will break and we will drop in price. There is no doubt about it. We need true volume to actually push the price of Bitcoin up. That's what we need, guys. We need good volume. I want to just remove all these circles that I've drawn so we can keep this nice and clean. Oh, well, that's good enough. We're going to move our trend line back. There we go. So this, guys, is... Oh, we're going to move this one, though. I don't like that. That is ugly. There we go. So this is what I'm seeing here, guys. Man, I got a frog in my throat this morning. This will be the trend. If everything stays as it is, this will be how it pans out. In my opinion, like I said, we had the bounce, and we're currently trending on this trend line that we had here, this direction. But this is the shape of the pattern. This is how technically it will play out if Bitcoin is left to do its thing. Now, will that be the case? Who knows? We're going to move into the weekend. Hopefully there's a bearish sentiment, or a bullish sentiment, I'm sorry, not bearish, bullish sentiment going on, and we see Bitcoin rally out of this triangle, and we start making new highs. I myself am skeptical. I personally feel, guys, that we're going to descend. We're going to test this trend line over and over and over again until eventually we break down. Why? Because I think that we need to see that 4K to get the momentum to send us into the bull market that everybody has been touting since the beginning of April. That's just how I feel, guys. That's going to do it for the video this morning. If you're still with me here after all this time, guys, hit that subscribe button as I try to post a video every single day, Monday through Friday. And by the way, guys, I need to start making this disclaimer on every single video. This is not to be taken as financial or trade advice. I am not a financial advisor. So that is just to be keep in mind every time you hear me talking about technical analysis. I am new to this thing. I am just starting to learn it, and hopefully I'm educating you guys as I educate myself. And with that being said, if you learned anything today, guys, hit that like button, share it with a friend. As always, thanks for watching, and I'll see you in the next one. Peace.